good morning. Well, today is the 9th International Day of Yoga. As you saw on your screen, snippets from across the world highlighting that the Prime Minister Narendra Modi will be leading a massive yoga demonstration today at the UN headquarters, in fact, in New York. Later today, of course, 5 p.m. India time. It was, remember, the UN headquarters where PM Modi initially proposed the observance of this day back in 2014. Back home, of course, the main event is going to be taking place in Jabalpur in Madhya Pradesh, where a mass yoga demonstration will be led by the Vice President Jagdeep Dhankar. In the capital, the celebrations will be organized across 26 prominent sites, including the Red Fort, Connaught Place Central Park, Kartavya Park, Commonwealth Games Complex, as well as major green spaces like Nehru Park, Lodi Garden and Coronation Park as well. The Union Home Minister Amit Shah and Smriti Irani will be attending these events in New Delhi, and in fact in Mumbai as well. There were quite a few yoga gatherings all around.
Are you a yoga person?
Yes, I am a practitioner of yoga, and it is not just about bending and stretching. It is not about asana. It's about really connecting with the dimensions of nature. What is yoga? It is really understanding that how the energy levels of your body can align with the universe. So all the asanas, actually what we have technically, they have a purpose. They have a purpose in terms of how they connect with nature or how they connect with the environment. It is something which can really redefine. It can redefine the lot of dimensions in your life, your energy levels, your thought, your body alignment. So it's not just bending, stretching, and touching your toes, or perhaps doing some abs. No, it's just beyond that. Yoga is all about exploration. It's all about redefining your understanding with the nature, and it's all about connecting. Whether it is in breathing asana, whether it is perhaps Nostrasana, there are a lot of asanas, we can talk about it. But yeah, for me, I'm a practitioner of yoga from years, and it is something which I would advocate everybody.
Well, the market also seems to be in some sort of meditating mode before the next leap forward. And we were talking about this yesterday. While the index did see a massive recovery from the session lows, it's the FISL figure once again.
I think yesterday would be because of Aberdeen selling HDFC
Perhaps,
MC.
yeah, perhaps.
We are looking at that number, but you can't look at it because the block did also have some FI buying and FI selling. Look, for me, the first number is that FIs have sold for last 2 days. And FIs have sold, and have we seen any kind of a large collateral damage to the Nifty? Look, the sell figure is a very large sell figure, yesterday's sell figure and Monday's sell figure. Look at that sell number. But what happened to the market? The market yet, despite that sell figure, started flat, closed almost at the highest point of the day. You add the number up, it's about 3,000 crore. And 3,000 crore is a fat number by foreign institutional investors. So while everybody is aware of the importance of FI buying and the fact that it's the liquidity sugar rush which has really taken this market higher, I think from a market standpoint, just like one swallow is not summer always, I would say you have to wait for a couple of days to understand the trend here. It may be that we may be nearing some kind of a pause in the FI buying momentum, but for that to affect the market mood, you'll have to wait for some more days. So let's discuss it when it happens, because 2 days could be there could be a compulsion here, there could be profit booking, there could be some fund who's looking at cutting India weightage, who's looking at taking some risk off the table. So I will not read too much into it in terms of an FI number. But what I would, in a sense, flag off again is the unique activity in the mid and the small cap space. Block deals, HNI activity, the desire to now go down the ladder, how this market is now turning rocks and corners and the oceans and the seas to find some treasure. So the treasure hunting truly has started in this market, and it is very, very evident. And that's the market you really want to stay focused on. I think if FI selling intensifies, if it is $1 billion out in suddenly 2-3 days, let's discuss the macros then. But I think it's too early to say that it's trend. Right now, if I say that FIs have reversed, then I would be whistling in the dark.
Well, yeah, but yeah, the thing that you pointed out, the broader market is something which has been outperforming massively. In fact, if you look at the last 22 sessions, it's only 2 sessions that we saw that the mid-cap and the small-cap index ended in the red. But barring that, we have seen a great momentum when it comes to mid-cap. Of course, the mid-cap 100 is sitting at record high levels, and the small-cap index too has been scaling fresh 52-week highs on an everyday basis. But the other big thing that we are talking about is Prime Minister Modi's visit to the United States. Of course, apart from the yoga celebrations, he's also meeting a whole host of experts from different fields, right from culture to economics to what's happening with respect to the global markets as well. That's the big story that we are tracking at this point of time. He, of course, got the grand welcome in the United States in his first state meeting. From today till the 24th, he will visit the top bosses of US Inc. and policymakers, including a state dinner, bilateral talks with President Joe Biden, and an address to the joint session of the US Congress. And it couldn't have started on a better note. Remember, Prime Minister Modi met with Elon Musk yesterday, who was only praises for the Prime Minister. He said he's a big fan of Prime Minister Modi, and I quote, PM Modi really wants to do the right things for India, unquote. He added that he will plan a visit to India again next year and is looking forward to bringing Starlink to India. Modi also met with Indian diaspora billionaire investor Ray Dalio, who said that India has enormous potential. Listen in to what they had to say.
Well, I'm actually incredibly excited about the future of India. I think India has more promise than any large country in the world. He really cares about India because he's pushing us to make significant investments in India, which it is something that we intend to do, and we're just trying to figure out the right timing. In a nutshell, it was a fantastic meeting with the Prime Minister, and I like him quite a lot. He visited our Fremont factory several years ago, and so we've now known each other for a while.
Prime Minister Modi is a man whose time has come at the time that India's time has come. The potential of India is enormous, and you have now a reformer, a radical reformer, who has the ability to transform it and the popularity to transform it. So I think India and Prime Minister Modi are at a juncture in which there's going to create a tremendous opportunity, tremendous changes in India that are going to be really startling.
So if you are planning to trade today, there are two things you need to monitor. One, FIs have sold in last 2 days, but that has not broken the back of the market, which is very important for us to flag off. Second, on an intraday basis yesterday, we've come close. We've come close despite that big sell number by foreign institutional investors. The overnight indicators are again strong and favorable, while SGX may tell you, maybe indicating that it could be a pushback. But frankly, there is one way that we can get extremely obsessed with the ring and with that print of an all-time high, and that is not happening. Why is that not happening? Why bank stocks are not going higher? Why Reliance is not going higher? That's one approach that we can focus on that. Second approach is you say, okay, I'm not going to be too much. I will not be guided by only a Reliance, a move in Reliance or a HDFC Bank or what happens to Nifty. Let me hunt opportunities here. And I think there are a plethora of opportunities. Hospital stocks have made a comeback. Defense stocks are holding on. Railway stocks are looking up. Manufacturing spaces seems to be galloping very, very strongly. So my sense and my advice and my submission here would be ignore the large cap space. Ignore those 4-5 stocks which are not going anywhere. Because if you're obsessed with those stocks, obsessed with those 4-5 names, then you're missing on what really could be called as a very vibrant mid and the small cap space. Kunal, let's not talk Nifty today. No point, right?
Well, yeah, Nikunj. In fact, there are two different variants of this market rally. One is that the large caps are not participating, and that's why I think the many traders believe that possibly this could be a false rally for the index and we could be in for a major correction. But then when you look at the mid cap into the market, it's extremely vibrant. So you look at the portfolios for the mid cap, and it's significantly outperformed the large cap peers by a big margin. But I believe that it's a part of the phase for the markets where large caps, they tend to underperform sometimes, and then the mid caps tend to outperform. But once that phase settles out is where you see the market getting in sync. you also look at it this way, and as you rightly pointed out, that even after such a big FI selling number, if the market recovers in the second half to close flattish positive, flattish negative, I think that's still an indication that the strength is intact on the upside. Now the other part is that there was extreme optimism when the index was trying to come back to that 18,800 mark. So I think it's good that we've seen 2 days of volatility, because that would probably now balance out some of the opinions on the indices. So hopefully when we go back about that 18,800 mark, there could be some bit of more pessimism which can actually take the index much higher. So net the view is bullish till the time we hold on to those support levels. Even if there is a bit of choppiness or round of volatility, that should be taken as a good positive sign.
Okay, so a bit of a choppiness is not a bad sign at all for the markets. Naresh, what's your take? Because there was this momentum yesterday towards the second half in the banking names as well. We saw some bit of reversal on Axis, SBI, etc. Do you see it as a bit of breakout for the banking names, or do you believe the consolidation will continue?
So not really a breakout, but a reversal signal, at least for the names like ICICI Bank, Kotak Bank, which have seen a correction in the last few sessions. Axis Bank, on the other hand, has been the better performing one. The stock has made a new all-time high recently. Very few names in the Nifty have done so. So overall, Bank Nifty could see a bounce. It's only when we start crossing 18,900 on the Nifty and 44,000, 44,200 on the Bank Nifty, that is where we go into a momentum phase. And we are setting up for that. If we look at the whole broader markets to the Nifty, what we notice is out of the top 6 to 8 heavyweights, we've not seen a new all-time high in at least 6 of them. Even in the top 20 names, only 3 stocks have made a new all-time high recently. So even if a few stocks start contributing, we go into an all-time high, and we could get into a momentum also if a couple of them take leadership. So the view remains positive, waiting for more price action to confirm that view.
Bank Nifty yesterday, now can it really do the trick? I mean, first it was Bank Nifty, then it was Nifty. Now could it be Bank Nifty once again? Now for that to happen, HDFC Bank has to go higher. For that to happen, SBI has to kick in. I don't think the sole heavy lifting, in a sense, will be only done by what ICICI Bank can do. So Kunal, you've got PL on your radar. Now this has been a stock where time and again everyone's gone bullish and everyone's got it wrong. But this time, is it different? Yeah, it seems like everyone's gone bullish. Yeah. Oh, how could great quality DHFL acquisition? Okay, one more quarter, no more write-offs coming, unlocking of the pharma business. They've tried everything. I mean, they're trying to create shareholder value. But the old write-off cycle for the balance sheet is just not over. I mean, the trigger point really could be the Shriram Transport sale. Yeah. At some point in time, Shriram Transport investment by Paramil Group was that, okay, they're going to be consolidating and making a bank and merger will go through. It's not gone through. Sorry, Kunal, I took the technical side away.
No, fair enough, Nikunj. But on the charts, there has been a structural change which has happened for Paramil Enterprise, because after so many attempts towards the 200 DMA, for the first time the stock has successfully managed to climb above those 200 DMA levels. Now, I think last week or so it initiated a buy. Stock is now ex-dividend of I think 30-31 rupees for itself, which means the net price for Paramil Enterprise is still at 855, 860 plus levels. So looking at the charts, the structure, the volumes, the recovery for the stock, the covering the entire NBFC real estate out space, I would believe that Paramil Enterprise could be a good bet from current levels. So would maintain the targets of 900. Traders could look at a fresh buy even at current levels. Keep a stop loss at 800 levels for Paramil Enterprise. And L&T Technology Services has given a fresh breakout yesterday, a flag pattern breakout. And we've seen this pattern for the IT sector as well, that many of these large mid-cap IT stocks are actually outperforming their large-cap IT peers by a good margin. L&T Technology Services is showing a very similar kind of a breakout, which suggests a buy with 4,200 as the target, stop loss at 3,800.
Right. Naresh, let's have your stock calls as well. What are you betting on?
So going with the large caps, the first one is a buy on HCL Tech. The stock has given a cup and handle breakout yesterday. Also, the leading stock in the large cap IT space, 1150 has been crossed. This was attempted 4 to 6 times over the last couple of months, or rather 4 months. So a clean breakout here, and we've seen outperformance one by one in IT names apart from the top 2-3 heavyweights. So expecting HCL Tech to move towards 1300, stop loss to be kept at 1140. Second is a buy on Kotak Mahindra Bank, which is a contra bet here. The stock has retested the gap levels of 1750 to 1830 and made a reversal candle yesterday. The recent highs of 2000 can get tested in the short term, stop loss at 1800.
Okay, interesting. HCL Tech is sitting at 52-week high levels, and Naresh is recommending a buy. And L&T Tech, which has been underperforming versus the other mid-cap peers, is actually something Kunal is betting big on. But what is the space that Atul Suri of Marathon Trends PMS is betting on? Listen into his take coming in on capital goods and engineering names.
And I think in India, what really happens and where we are heavily overweight, overinvested, are places like your basic capital goods, infra, construction, defense. These are sectors which have not performed for a decade, right? They were dead. Nobody looked at them. So the beauty is that they are underowned, they are undercovered, and they are ignored. And they still, as you asked me, you're still looking at another set of stocks. But the set of stocks that are driving the market is new. And that is the nature of the market. The nature of the market is to sidestep you. It will always be a place where the majority will not make money, or where the majority opinion is stock somewhere else will move. So I think that this is something that we've experienced last year. This is a very big shift we made in our portfolio. It was very painful. You know, the names that you mentioned, we sold last year, and we got into a lot of these engineering, infra, defense plays. And you'll realize that, hey, you know what? Here the bull market is something else. Even financials, is such a big universe. Look at the financials that are moving.
HDFC Bank is not doing well.
Kotak. I mean, I don't want to take names because for reasons, but you'll realize. So for me, I have an exposure in the sector, but my exposure is the NBFC space. You'll find that some high quality NBFC names, again, they may be little known, little discovered, less overowned, but I think they become perfect setups, you know, and the kind of earnings that are coming, the quarterly numbers that are coming. So even in financials, what I said, where everyone is looking at overowned and asking questions, actually the action is happening somewhere else. Exactly what Nikunj raised the point. There's action in financials, but not where everyone is invested. There is action. So we, for us, are actually shockingly, controversially underweight the large banks, and we are overweight the NBFCs. And I think that in that space, well, it's all doing great, yeah.
Well, let's now take a look at how the Yoga Day has been celebrated across the national capital. We have Bhavya Dua joining in with the latest right now. Bhavya?
As the world is all set to celebrate International Yoga Day, Delhi is no behind. 26 main sites have been shortlisted by Union Ministry of Ayush, where we'll be seeing people practicing yoga in the morning in Delhi. Some of these sites include Red Fort, Kartavya Path, where we are standing right now, Connaught Place, Central Park, and also a lot of green spaces like Lodi Garden, Nehru Park, and Talkatora Garden. Right now, we are standing at Kartavya Path, where 1,500 people are seen attending yoga right from the stretch starting from Rashtrapati Bhavan to India Gate. In total, 5,500 people are expected to attend yoga sessions in Delhi this morning, and Kartavya Path is the main site for that, which is seeing 1,500 people practicing yoga. Apart from these, 1,000 people are going to be expected to be seen at Lodi Garden, Nehru Park, and Talkatora Garden respectively. Even these green spaces have seen a lot of events starting from 17th of June till 20th of June, which was yesterday, building up to this day, and they saw a lot of yoga events happening throughout from 6:30 to 8 in the morning. And with the weather being really amazing, and we are also witnessing a few raindrops again here in Delhi, this yoga sessions going on around us surely seem quite refreshing.
Quite refreshing indeed, but it's time now to take a breather on the show as well. Don't go anywhere, lots lined up when we come back. Welcome back. Well, let's get stock and sector specific. And Nifty IT is one space which has been showing a bit of a momentum over the last couple of trading sessions. In fact, the IT pack or the Nifty IT has turned favorable on a YTD basis. So it's showing a bit of a green when you look at the YTD chart of that particular index. But it's been very, very divergent across the board. There you have it, the large cap names which have been underperforming massively. So Infosys, Wipro, TCS, they have been on the back foot. And the underdogs from the large cap category, whether Tech Mahindra or HCL Tech, they have managed to report some gains. But there were bigger gains coming in for the mid-cap names. So whether it was a Persistent or a Coforge or even KPIT Tech, these stocks are up between 20 to 50% on a YTD basis, and even bigger gains coming in for the small cap category. So whether it is a name like Nucleus Software or Cyient or Mastech, these are the stocks which have been doing quite well. Look at that gain on Nucleus itself, and even Cyient with that entire support coming in for the DLM IPO, that has seen quite a bit of massive rally. But the question is, why are we seeing a bit of a reversal? Is worst over for IT, and are the negatives priced in? Well, yes, it does look like that because the valuations have turned a bit favorable post the correction. The commentary which we have heard incrementally over the last few weeks hasn't been too bad. So whether it was a Cyient or a Coforge or even Birlasoft, they are not talking about anything incrementally more negative. They're just talking about how either things are status quo or how they're expecting a bit of a recovery in the second half of the year. What else is this thing that we're watching out for is the fact that the supply side pressures have been abating. We have seen a massive rally when it comes to the tech, heavy Nasdaq as well. So that's up almost 30% on a YTD basis. That's having a rub-off impact. And this entire clamor on artificial intelligence is something which has been termed as an opportunity, and you read the annual reports of whether a TCS or an Infosys, they are talking about the use cases of artificial intelligence, and that is now being seen as an opportunity for the Indian IT, and that's why we are seeing a bit of a reversal. Commentary there for you on the screen from the recent management interactions, and they're all pointing to the fact that there's a bit of a fillip coming in with respect to opportunity in AI, no worsening of demand, status quo or incrementally positive. Valuation is something that we've been tracking, and the valuation stack should come up for you on the screen. Some of the names are still at a premium to a 5-year high level, but not by a whole lot. So the valuations have corrected quite a bit, and the peak that we had seen of around 30, 35, 50 times for the Midcap IT, that has now kind of come back to normal levels, and that's why the entire space seems to be at least better placed. Is the worst price in, and is everything in the price, is the big question that we're asking for the IT companies. But apart from IT, what are the other stocks which will be in focus? Well, one of them is going to be PNB Housing. The management met with a few analysts, and they sounded fairly confident about the guidance that they had given at the start of the year, fairly positive about maintaining NIMs as well. Sharad is joining us with more details.
Well, yes, in focus we are having PNB Housing Finance and guidance coming in for FY24, where they are expecting the loan growth to come in between 18%, while for the disbursements it's ranging between 22 to 25%. Now, looking at the net interest margin NIMs, they are expecting that to improve as well, and they are expected to maintain it to almost 3.5%, and the spread is expected to be at a sustainable numbers of almost 2.5%. Apart from this, also the cost of funds, that is expected to improve, and this range between 30 to 35 basis points, and this is coming in as well on the back of access to the NHB funds as well. Now, apart from these numbers, management said that the next 4 to 5 quarters, that is where the asset quality is expected to improve, and the GNPL levels would be there coming at the industry levels of roughly 1.2%. Now, looking ahead, what is the return on its target scaling? That number is coming to be almost 2%, and the company has stated that the CAR ratio, which is basically your capital adequacy ratio, that is expected to come in at 30%. Apart from this, also PNB has intended that they won't be selling their stake, and they would be remaining as a promoter classification. And do remember, recently housing finance companies and the NBFCs has been on rally mode.
Okay, and here's Ajay Srivastava from Dimensions Corporate Finance saying that he's bought into Interglobe Aviation and believes that it has more legs to run.
To Tata, much more responsible. They need the cash flows. They cannot afford to have a price war in terms of cash losses. And with Singapore Airlines as a maybe 25 or 26 or 40 or 50% partner, very responsible partner at this point of time. I see as a passenger, the energy levels of the staff at one airline versus the other totally different. Therefore, I see the competitive framework is going to be very different. Yes, there will be pockets of overcapacity, which is why I keep saying that if you have powder, you buy these good companies. There will always be correction. Nobody's saying this share will always keep rising. There will be times your correction. These are great stories for decades. These are not stories for years. And that's the beauty of these stories. And, a few airlines can come here or there. Akasa or somebody can come here or there. But it can't change the landscape for these two giants of their living. And, short term, yes, volatility may happen. Give it a 5-7 year framework. I think you've got a very healthy company to work with.
Okay, let's welcome on board Chakri Lokpriya as well of TCG AMC to talk to us about the fundamentals of the market. Chakri, hi, thank you so much for making time and speaking with ET now, and happy Yoga Day to you. To begin with, I wanted to discuss Tata Motors. That stock is sitting at 7-year high level. Do you believe there are more legs to this rally, or would you want to churn and pick up some other auto name now?
Good morning and thank you. And yesterday, Tata Motors released in its annual reports fairly encouraging details in terms of its cash flow. You know what we've been debating about, that it will generate free cash flows for the next couple of years, which is indeed seems to be on track, which is a very good sign. JLR has a lot of electric EV models coming out to replace and replenish its existing lineup. CV business is doing fine. And so, all these fundamental factors which have actually driven the stock thus far will continue to drive the stock. And I think, we still remain very positive on Tata Motors.
Right. Okay. I think the big news this morning and the big trend this morning is comments from Elon Musk after meeting PM Modi, saying that he's pretty excited about the future of India, saying that Modi really cares about India because he's pushing us to make significant investments in India, which is something we intend to do, and that it was a fantastic meeting. When asked very categorically whether he's going to do business in India, he's saying that it's still pretty much conjecture, but yes, hopefully in future, and that he should hopefully make his way to India next year and is planning a trip. I know this is all, a very long drawn thing, but just Chakri, Tesla coming to India, what could it possibly do to the dynamics of Motown here, and of course auto ancillaries as well?
It could make a very significant difference. If you look at what Elon Musk has done in China, they can now produce cars under 45 seconds, one car. So that's the kind of investment that they have made. And also what it does is a host of ancillary industries. The whole sticking point between Elon Musk and India has been about the percentage of import component, which is a good thing in India's favor if it actually gets more domestic in replacing the imports component. So I think it's not just an Elon Musk coming to prepare to manufacture cars, but the auto ancillary industry, which is a mega industry already in India and has the infrastructure and therefore will benefit significantly.
Some stocks which yesterday closed above the 200 DMA. And the three diagnostic stocks there, Naresh: Dr. Lal, Metropolis, and Vijaya Diagnostics. Do you think diagnostic stocks have bottomed out, or this is just a dead cat bounce?
So I would say they have bottomed out for the short term, but they are not getting into a massive uptrend. So what I mean to say is we get into a consolidation wherein, say, the recent, for example, if you look at a Metropolis, the recent highs back in November were around 1700 levels. So, bounce towards 1700 qualify it to be a major trend, say from 1400 levels. The stock has fallen from 3500. So bottomed out for the short term, a short-term trend in making, and then again it goes sideways is the view. Same is the case with Dr. Lal Path Labs. The stock has fallen from 4,000, 4,200 all the way down to 1,800. Even after the last 3 days of move, the stock is at 2,200. The highs in September to November of last year were around 2,700. So out here, it's a short-term trend, given that they had fallen 50-60% from the top. If they recover, say, even 30% of the move, it would still be a longer-term downtrend. So for now, the momentum is strong. And the risk reward has gone off after the 2 days of move. Maybe a Thyrocare is still left where there is some risk reward left. But overall, this is a tradable bounce rather than a dead cat bounce.
Okay. Chakri, these businesses were commanding P multiples of 50, 60 plus at the peak of COVID, peak of testing, peak of COVID, peak of market cap. But now life is back to square one. But when life is back to square one, it means that these businesses are still growing. When I say these businesses, diagnostic businesses. How would you rate this sector now?
The stocks have fallen a lot. Two things have happened. One is competition has increased within the sector, and therefore the margins have come down and will not unlikely to go back up to, let's say, 3-4 years ago. Now, a lot of hospital companies are also in the diagnostic space, and therefore margins will be lower. Second, what will help the sector, kind of provide support to the sector, is all those elective surgeries, all those elective treatments, which all came to a stop during the COVID, have come back very strong. within the hospital chains and standalone hospitals. And mind you, standalone hospitals are still the driving force across India. The chains very small market share. So which means individual diagnostic chains benefit from the growth of standalone hospitals. So from a moderate return perspective, I think still the diagnostic companies do look okay. In terms of their outlook, yes, because standalone hospitals are the bread and butter of this country in terms of market share. They do have a long run to go.
Okay, in fact, talking about diagnostic stocks, they surely saw a stellar run during COVID, but since then have been lagging. We spoke with Thyrocare founder A. Velumani, and he believes that it will take the industry at least 3 years to reach the peak of fourth quarter of 2021. In fact, in an exclusive chat, he also told us that at least 5 to 10% of his portfolio is still within diagnostic names.
Today, state-wise itself, there are 100 players. They do take care of their balance sheet. Those who take care of balance sheet and pay tax are organized.
Good.
So today you find a good number of people in the dream of valuation. They are putting up a proper show. I think the industry is becoming organized, but the organized players are too many, and that makes the top players to struggle for their top line growth.
Hypothetically, now that you are an investor, you're incubating small businesses, would you be looking, if given a chance, would you like to buy and invest into diagnostic stocks?
I would love to buy diagnostic stocks to an extent of 5%, 10%. I don't want to.
Do you see value in them?
I think if at all somebody is not in a trading business and somebody is not looking for encashing next year, diagnostics is the right discipline to invest in. Healthcare will certainly one day be big enough. Temporary setbacks are an opportunity to get invest in. So, even when I exited, I did buy all my competitors' stock, including Thyrocare stock.
Okay.
But then to my surprise, what I purchased has again gone down another 30-40% down. But my bet is I would advise everyone to look diagnostics much more seriously now. If not, you will never be in diagnostics.
Okay, that's the word coming in on the diagnostic names. Also bring out the chart for RVNL because they've categorically clarified that there is no breakdown of a joint venture with Russia's TMH and that the MOU is still valid. Remember when this concern really propped up on a breakaway of that MOU with the Russian counterpart, you did see some amount of pressure on these railway names as well. And Chakri, railways, defense, that really seems to be the underlying theme in the market. You believe there's still further headroom and still opportunity to buy into this trend?
Indeed, there is significant trend because what is happening with number of companies because of the underlying change. Just both the railways itself is moving to Vande Bharat, faster trains, longer carriages, longer train runs. And so with all this, they're just moving away from just building wagons. They also rail systems, etc., becoming very important. Companies like Titagar wagons, which have gone up like some few 100% over the last 1 year, are still inexpensive stocks. They still trade about 17, 18 times. So I think there's still room for these railway stocks.
Okay. Chakri, but why do you say that? Because these stocks are, like you said, multi-year high, valuations are slightly stretched, and again railway capex is not like FMCG where margins are 30% or 40%. These are long cycle businesses where you get the order book today, it will be executed in 4-5 years. It's not like making a pizza that you can make in 30 minutes. If you're making railway wagons, it will take 3-4-5 years.
Yeah, absolutely right, Nikunj. And in fact, that is going to be the driving force, which is, as you said, the big order books. So this provides revenue visibility for the companies, for all these companies in this space for the next at least 5 years. Yes, the order book can be very lumpy and therefore they can miss quarterly estimates and therefore they'll be volatile. But in addition to just making wagons, they're moving up the value chain. They're getting some import substitution and therefore the value add, therefore the margins of these companies can kind of increase over the coming years. They've had a phenomenal run, 300-400% up in depending on the stock for the last 1 year. But the valuations are, given the margin profile, are still about, take Titagar Wagon, for instance, 17, 18 times, which is still not expensive given its earnings growth rates given to Solomon.
Right. Okay, electronic manufacturing services, they will be emerging as a major theme in the country. That's the word coming in from Manish Shikhani from Inam Holdings. He believes that the time for India is here and hardware could see a big boom, much like software did over the last few decades.
Apple moment in India is staggering for what has happened, and I think it's as transformational as when GE came to India for software services. So Apple's come in and already they are on a run rate of $10 billion exports from India this year.
iPads are also coming soon.
And their stated ambition is to go to 100 billion exports. Now imagine what it does for the ecosystem. So when a Maruti came, you know what happened to the auto and ancillary industry. When GE came, what happened to the whole software services industry. I think the next generation of kids coming out of college will not want to go to software, they will go to hardware. Because that's the combination of hardware and software together. Yeah. And you see beneath the surface what's been happening to the EMS companies.
So is that the new theme now? Next,
I mean, it's been the theme. I mean, we've all been buying it, participating in, all of them. So, 5, 6 of them, and they're still at the bottom end of the sort of value stack. But when the Tatas will put up their semiconductor stuff and we start going deeper into that ecosystem, it's inevitable. Because whatever we are importing today, in 10 years, we should be exporting that.
Okay, HDFC Life, that's really been the one big buzzer in trade, and now the CCI has allowed HDFC to acquire additional stake in the company and HDFC Ergo as well. This stock, of course, has been on a tear since Friday. Naresh, let's quickly revisit the charts of HDFC Life and whether you see continued momentum on this one.
So HDFC Life has been a surprise in terms of the momentum over the last 3 sessions. The stock has taken out that 620 resistance. Before the budget, the high for the stock was around 615. So we've clearly managed to surpass that. And now the next resistance for the stock really comes at 680 to 700. The only problem is in the last 2 sessions, the stock has moved up quite a bit. So the risk reward is not great. But any fade off move towards 620, 25 would be an entry point wherein one goes for a long entry there, keeps a stop loss at 600 and expect the next leg of the move towards 680, 700. The volumes have been good in the last 3 sessions as well. So possibly the indication is the bottom is done. There is a new trend starting up for HDFC Life, but would keep a strict stop loss here.
Okay, so that was about HDFC Life, but what are the stocks on editor's radar? Cyient as well as Shriram Finance. Nikunj, I want to start with Cyient because this Midcap IT company has seen a massive run. And of course, there's that trigger of the DLM IPO coming as well.
That's the trigger right now. Nisha, you know that what's happening to the entire electronic manufacturing cluster. That's one space which suddenly has now become the new pot of gold, so to speak. Now, what is the connection? Well, they got a subsidiary which they're planning to take public. If you want to take the subsidiary, it could lead to potential value unlocking. Anywhere between 85 rupees to 110 rupees is what brokerages are indicating in terms of the estimate. The subsidiary IPO could open, that's what we understand, on 27th of June, which means another 2 weeks and the subsidiary goes public. Now, how do you compare? Well, you look at DLM's valuation, compare that with the existing companies, and the existing companies are 3-4 companies what you have. So if you use that for benchmarking purposes, add a 10% discount back, you're looking at least 100 rupees plus getting unlocked. And typically when a sector is in a bull run, the subsidiaries, they tend to re-rate the parent also. That's what we've seen historically. So largely because of this news, this is one company where you could actually see some tailwinds and perhaps a lot of interest, not from the institutional investor per se, but more from the HNI crowd.
Because as you said, that entire space has been a darling of market at this point of time, and anything related to electronics manufacturing has been doing well. This, of course, manufactures complex electronics. But Nikunj, what about Shriram Finance? We have seen that just this week itself, earlier TPG had sold around 2.6% stake, and now we understand that Paramil Enterprises is also exiting. Does this tell you that there is some problem and people are booking profits, or does it tell you that the overhang of supply is over?
So you have to realize that who are the investors here? TPG, they've had a long-term association with Shriram Transport Finance that ran into years. Shriram, the Paramil group bought a strategic stake. It was more than an investment, and later on when they were not able to scale up what their plan and what their vision was because of regulatory challenges and change in business strategy, they treated this as an investment. They are looking at exiting their investment. This has been an overhang. This deal of Paramil exiting Shriram Transport has been an overhang even pre-COVID.
Yeah.
Pre-COVID, this has been an
in the
overhang.
works for a
Finally,
long time.
that deal is going through. Now, there are two parties here. One, Paramil Enterprise, they will get the cash, and second is Shriram Finance. So, why are we picking up Shriram Finance? Yeah. That's largely because of the business cycle the company is in. The business cycle is essentially CV financing. That cycle has picked up, and especially the second-hand CV financing, that business is picking up. See, imagine the number of roads. Number of roads are getting added up. The entire length and the breadth now is getting connected very easily. Interest rates are very affordable. Things in terms of the freight movement, they are also picking up. Interest rates have peaked out, and this company has a great quality in terms of the book quality. So the overhang, I think, for Shriram Finance gets over, and we've seen post the TPG deal, the stock went up. Yeah. You may argue and say that in the near term, the institutional interest may not come because they're getting their fill right now because of the TPG block deal and the Paramil block deal. But somewhere HNI crowds have been, HNI cluster and a lot of smart retail guys have been waiting for this news. And I think this really could be a trigger point, at least in the near term.
Well, yes, that 10% supply coming in will satiate the demand of the institutions, but retail investors might look at participating now. So these are the stocks on editor's radar, Shriram Finance as well as Cyient.
Okay, let's pick it up from there. In fact, let's understand what the charts are reading for Shriram Finance. Kunal, I don't know if you've been tracking the charts of this one. Have you?
Well, yes, Aisha. In fact, when the stock was at 1375.80 levels, it actually formed a flag pattern on the short-term charts, and the flag pattern was almost an 80 to 100 point pattern for Shriram Finance, and from there it moved on to that 1450, 1475 odd zone. So I think it's come back into a big breakout mode for itself. I was expecting a 100-point rally from those 1400 odd levels, but that seems to have now gone into a 150, 160 point rally for Shriram Finance. The indicators are not yet overbought for the stock price, and I think that's the comfort which the stock would probably get into if there's any kind of a correction to the stock price because of the indicators not being overbought. I believe that the comeback for the stock could also be quite strong. So I would believe that 1475, 1480 odd mark could actually act as a good base or a support for the stock over the near term, and we could be looking at a build-up of the rally and the trend which the stock has seen over the last 1 to 2 weeks.
Chakri, the block deal in Shriram Transport Finance, what do you think it means for Paramil Enterprises? We are analyzing one side of the story, but there is also a seller who would benefit.
Indeed, as you rightly pointed out a few minutes earlier, Paramil originally wanted to get into this from a strategic perspective, and due to a change of their own internal planning procedures, or rather their focus, this became just an investment, and it was a large investment clearly. So I wouldn't read too much into, from a Shriram perspective, why they're exiting. It's a good thing they're exiting for Shriram. And in the case of Paramil, it didn't fit into their strategic plans anymore. And they had a leveraged balance sheet, and they're on the course of mending that. And this will also help Paramil because it makes their balance sheet stronger.
Right, okay, that's the take coming in on some of the buzzing names, Shriram Finance for sure. Look out for some of the other names as well, which are going to be in focus. And we understand that Pidilite is looking to set up a unit in Gujarat to manufacture, two of their key products actually. So that's another stock which is going to be in focus. Shilpa Medicare, which is looking at a fundraise on June 23rd via rights issue. And then Thyrocare as well, like we flagged off, that could be a stock which could see some positive momentum in trade today. Just want to mark a couple of other names which we're tracking this morning and which could actually see some positive as well as negative news flow coming in. A lot of course, brokerage notes have come out, but look out for a PNB Housing Finance as well. The management meet takeaways, and they have guided for a loan growth of about 18% for FY24, with disbursement growth in about 20 to 25% kind of range. And of course, Blue Dart as well. I was just talking about brokerage upgrades. Motilal Oswal has upgraded the stock to a buy from the earlier neutral and hiked its target price as well. to 8,040 from the earlier 6,190. So these are a couple of stocks which are going to be in focus. The one key thing, of course, is data patterns and landmark cars is where the lock-in period ends. So that gives the window to PE investors to actually exit. Typically in the past with the newly listed universe, especially some of these tech names, one has seen a big exit and the stocks were under pressure at least that day itself. So look out for what these names actually do in trade. But Chakri, anything from the newly listed universe, including landmark cars, which is not really a tech name, but something that you like and would use these kind of lock-in period ending day opportunities to buy more?
I'm sorry, I haven't been following those stocks that closely. I don't have a strong view on that.
Sure, Chakri. So that was about the landmark cars, which is a play on the luxury sales that are going up. But the other way to play it is the entire hospitality sector. It's seen a massive re-rating this year. Would you still be a buyer in names like Indian Hotels, Chalet Hotels, etc.?
The Indian Hotels is trading at close to its 52-week high. The valuations are still okay, but I think companies like Chalet Hotels have not run up as much, and valuation is still on their side. The business fundamentals are strong across the whole hospitality board. Thomas Cook is yet another name is delivering strong results across its businesses, right from its foreign exchange business to Sterling Holidays. So I think Chalet Hotels, Thomas Cook look good in the current environment.
Right. Since we're talking about hotels, let's also hear it out from Ajay Srivastav and what he makes of the entire hotels space.
You're riding the best hotel wave ever the last 1 year has existed in this country. Number two, just like real estate, see the consolidation. Earlier, every uncle, auntie, and everybody wanted to put up a hotel. Now see what's happening everywhere. They're going to Taj, they're going to ITC, they're going to saying, listen, can we lease our hotel to you and you do the work at the point of time? Whether it is your home stay, whether it's a hotel, or whether it's the economy hotel, they're all going to the big chains and saying, listen, guys, take it over, give us some money back. So any industry dynamics like real estate has changed dramatically in the hotel sector. And I think that is where these guys are going to make a killing, because it doesn't make sense for anyone to have a standalone hotel today apart from the chains, the way the economics has worked out. And that's what's coming to the fore. Yes, they got competition, not from hotels. Nikunj, the competition is coming from homestays. Most people are preferring homestays to hotels at this point of time, at least the upper end, the luxury. And that is where they will get a competition from. But I think the big play is coming. All the existing capacity slowly in the system is getting leased to these companies. So if you look at next 5 years, the supply of hotels is going to diminish in my view, because there's no new construction at the end of the day for hotels. There are pockets of India which is totally don't have good quality hotels. So I think it's a great story. You'll get a chance to buy lower prices, or most certainly, definitely you'll get a chance. Should he be out of the story? Or definitely not, because you don't know where the market goes. The party continues at this point of time. So I keep saying.
Chakri, what is your view on Z? There is a lot of yes and no whether the merger will go through. But independently, do you see value in a franchise like Z?
There is indeed a lot of value in that franchise. But with the news flow as well as the confusion related to all those issues surrounding Z, makes it very difficult to, what will be the operations left. What is the combined operations is itself in question. So given that level of uncertainty, I think it's best to stay away from Z.
So that's about Z Entertainment. It's back at 2021 lows. But Chakri, what about the entire IT space? We were just discussing Cyient, one of the names from that, universe. What about the other mid-cap, small-cap IT names? Is there anything that you are identifying?
Companies like Cyient or Coforge, which are targeting more specific areas, unlike the large-cap IT like Infosys, TCS, are better placed because of their product focus. Fortunately, is in line with the cycle of technology spend. And again, if you look at the large cap itself, their top end revenue guidance is pretty much very reasonable, anywhere between 4 to 7%, and going into the next quarter. So the big fear is that will there be a downgrade of the estimates going into the second half, which bearing, depend upon what Fed does. Again, there's still that huge uncertainty which has been about interest rates, which has been holding back some of these services companies. I think tech stocks have largely bottomed out, including the large cap. The small mid-cap IT stocks have actually done very well.
Right. We've been talking about especially the aviation pocket after that mega deal that Interglobe Aviation, took with Airbus. And Air India now has finally signed that earlier agreement to acquire 470 aircraft from Airbus and Boeing. The purchase agreement is valued at about $70 billion and comes a day after Indigo announced its mega deal with Airbus. In fact, let me take it across to Samir and get in more details on the same.
Now, these are definitely exciting times for the Indian aviation sector. After Indigo, now Air India, Tata-owned airline, also firms up its order of 470 aircraft, which includes a combination of Boeing as well as Airbus aircraft. The purchase agreement was signed at the sideline of the Paris Air Show. And if you see the aircraft composition, the order includes a combination of Boeing and 737 narrow body as well as wide body aircraft. The composition includes that it is going to be 34 A350-1000 aircraft, Airbus A350-900, 20 Boeing 787 Dreamliner, 10 Boeing 777 wide body aircraft. In addition to this, 140 Airbus A320 Neo, 70 Airbus A321 Neo, and 190 Boeing 737 MAX narrow body aircraft. So with these narrow body as well as wide body aircraft, Air India is looking to have a strong presence in the domestic, in the regional market, whereas having a significant presence in the international route as well. And the same has been stated by the chairman of Tata Sons and Air India, and Chandrasekharan. He has mentioned that the massive order, the significant order that has been placed by Air India, it reflects the long-term growth strategy and the success that Air India is going to have in coming years. Now, in addition to this, if you see the aircraft order composition, Boeing 220 aircraft has been order has been placed by India, but it also includes that additional 70 order could be placed. Now, these 70, the space for additional 70 aircraft order includes 50 737 MAX aircraft and 27 87 Dreamliner aircraft. So this is the composition that the order includes, and the quantum of this deal is of around $70 billion, as it is there in the list price. So that is a massive order that has been placed by Air India. And this announcement was already done in the month of February this year. But the new part or the development is regarding the delivery schedule of the aircraft or the order that has been placed. So,
all right, happy Yoga Day in case you just tuned in. And in case you were late doing yoga, don't worry. We've got all the things covered for you. Let's look at the construct of the market. Now, we can endlessly argue about when the all-time high would be made, why it is not being made, why a bank's not outperforming. But just look at the FI data here, please. Last 2 days, we've got 3,000 crores of FI selling. There were two large blocks, HDFC Bank, and there was one more large block. And then there is going to be one more large block today in Shriram Transport Finance. But despite large blocks of about 3,500 crore, about 4,000 crores this week, let's look at the Nifty. The Nifty, frankly, has not really cracked. In this week itself, now that's yesterday's data, please. Let's look at this week. In this week itself, the Nifty, I think, has done reasonably well for itself, which means the FI selling, despite the market move, despite FI large and large blocks, I don't see there is a problem per se. Now, the question you got to ask yourself is that, will it be sectoral rotation in favor of IT because IT is showing signs of bottoming out, or will banks make a comeback? I would still say banks. Yes, HDFC Bank is underperforming. Yes, SBI has done nothing. But rather than betting on something which is obvious and where the comfort of valuations and the comfort of flows and the comfort of near to medium term visibility is there, IT would be a pure contra bet. And you always want to bet on contra bet when you think that either valuations are attractive or the pain in the US economy is nearing its end. And I don't think so. I don't think we can guarantee and say that, okay, the problem for the US economy is getting over. Now, for IT companies or IT stocks to do well, you don't need NASDAQ to do well. NASDAQ is doing well because of NVIDIA, AI, what Microsoft is doing, how the world is shifting gears, how everything now from cloud has moved to AI. So that's a different kettle of fish. And that's a question which, I mean, asked, so I'm extending this point forward, that just because Nasdaq has rallied, Indian IT companies, at least the ones in India, they don't get out of jail card. The out of jail card for me for Indian IT companies will come when banks will start outsourcing more, when manufacturing companies will start outsourcing more, and when the real US economy actually makes a comeback. And Chakri, that's my limited point. I mean, this is this old school thought which again and again seems to be surfacing up. Nasdaq is up, so buy IT stocks.
You're absolutely right, Nikunj, in the sense, given the focus of the Indian IT companies, which is largely services, so whether it's cloud or AI, they will benefit from companies getting themselves ready. The recent couple of things in terms of, the banking problems in the US in the beginning of this year, which led to bankruptcies of 3 or 4 banks and troubles over there, led to some amount of discretionary slowdown in spending in IT by banks. But IT as a productivity enhancer and the order book going into the second half of this year, there's been absolutely no change. Some of the things that people have been, industry participants have been concerned about is there's been a slowdown in the hiring by IT companies. But that is indeed a good thing because it shows that A, they're not laying off, so the demand is intact. It's just that the pace, they're waiting for the uncertainty to settle down. Second, the valuations itself have kind of bottomed out. And 3, the revenue, most importantly, still seem to be, I mean, they're talking about 4 to 7% growth, which is a very good number. So that translates into about a 14% earnings growth. So I think, yes, IT is beginning to bottom out, large cap IT players.
Okay, large cap IT is bottoming out. That's the word coming in from Chakri. But let's take a look at some of the other breakout counters as well. Yesterday, HDFC, AMC, Amber Enterprises and Jamna Auto saw a bit of a breakout. Kunal, if you had to buy one of these names, what would be the top bet?
So I think HDFC AMC could be a good bet even at current levels. I believe that the stock has confirmed a breakout of multiple resistances. 1800, 1850 was the first and the more formidable resistance for HDFC, and the stock has climbed up almost 10% higher than the previous major resistance. So that's a strong indication of a breakout. Even Jamna Auto, I think in terms of a risk reward, could be a very attractive bet. I think the stock was at 130.35 almost a year back. It fell down to sub 100 levels. It's now made a good comeback. So even if you're looking at a recovery of sorts for Jamna Auto, then possibly the stock can at least come back towards 125, 130 mark, say over the next maybe 3 to 6 months. So that's the kind of a time frame which I would be looking out for. And many of the stocks have seen such kind of recovery for themselves in the last couple of weeks. So even in the market getting a lot more sideways, there are a lot of these mid-cap stocks and the underperforming names which are making a very strong comeback, and that itself indicates that this rally is here to sustain for many of the sectors as well as stocks. And the underperforming names, if you try and have patience into these kind of stocks, the risk reward could be very fruitful.
Okay, risk reward could be very fruitful for some of these mid-cap names. So let's take some of those mid-cap strategies as well. But before that, Chakri, thank you so much for joining us today. Appreciate your time. But Naresh, what's the top mid-cap strategy coming in from you?
So out here, looking at a small cap to mid cap, which is basically Bajaj Consumer Care. The stock has been sideways for a period of time now. The stock has given a breakout over the last 1 month, a good range breakout done. And after consolidating around that 185 to 195 mark, the stock made another move over the last couple of sessions. So indicates that the momentum is right now in place. The range breakout is done. So this could continue towards 220, stop loss at 185.
Okay, so that's the take coming in. Bajaj Consumer is something that Naresh likes. Kunal, what about you?
Well, Celeste Ban, BHEL, the stock is nearing a very strong breakout. So on weekly basis, 89.90 is the closing high for the stock in terms of the last 3 years. I believe that it's very close towards a breakout of this weekly pattern. So with Celeste Ban, BHEL, targets of 100, stop loss could be kept at 80.
Okay, so that's the take coming in. BHEL is one of the stocks that Kunal likes. But time now for the news fatafat. Okay, so those were the top stocks to watch out for on your screen, but which is the stock which is likely to move on account of some cover on the Lal Street? Let's go across to my colleague Sharad. He's joining us with some latest update coming in for Larsen & Toubro. Sharad.
Well, yes, in focus we are having L&T, and the company is expected to win an order of roughly $2 billion or 16,300 odd crore rupees from India's one of the largest infra projects. Now, this infra project is the Mumbai-Ahmedabad high-speed railway corridor. And do remember, this order inflow is expected to add almost 8% of the total orders for FY24. Already the company has won almost 80% of the orders in the Gujarat leg of this project as well, and this would be one of the largest components. Now, do remember the itself, if we look at the triggers going ahead, the strategy for the company would be focusing on large complex infra projects, especially in the green hydrogen segment. Now, we have already seen a pickup coming in the private capex in the infra industry as well, and the company is also expected to get the second largest power project award, and this would be coming into the tune of almost $1.6 billion or roughly 13,100 crore rupees. Now, the stock itself has hit its all-time high levels and it is near its record numbers. Now, apart from this, recently it was also declared the L1 bidder coming in for the Mumbai-Ahmedabad bullet train project, and that itself order value stood at roughly 15,700 odd crore rupees.
Okay, so that's about L&T, and for now, let's take a look at the pre-open rates for the markets as well. It seems like we are going to get closer to that all-time high level. 18,860 is what the HDFC Nifty is, the Nifty is suggesting in the pre-open rates. Remember, the all-time high is 18,887 thereabouts, so just 30 points as far as that is concerned. Let's mark some of the stocks as well. Shriram Finance is showing a 10% uptick in pre-open. Paramil Enterprises, which is going to get that money, is also higher by around 8%. Blue Dart, wherein you got a Motilal Oswal upgrade coming in, is also higher by around 6 to 7%. You also have GR Infrastructure, which is going to react to an order inflow. Jamna Auto continues the momentum, and RVNL issued a clarification that Vande Bharat order might not hit a roadblock. So those are some of the stocks in focus. On the losing side, Aptus is the stock that we are watching out for. But what are the stocks on editors' radar? Listen in to Nikunj's take on Cyient as well as Shriram Finance.
Know that what's happening to the entire electronic manufacturing cluster. That's one space which suddenly has now become the new pot of gold, so to speak. Now, what is the connection? Well, they got a subsidiary which they're planning to take public. If you want to take the subsidiary, it could lead to potential value unlocking. Anywhere between 85 rupees to 110 rupees is what brokerages are indicating in terms of the estimate. The subsidiary IPO could open, that's what we understand, on 27th of June, which means another 2 weeks and the subsidiary goes public. Now, how do you compare? Well, you look at DLM's valuation, compare that with the existing companies, and the existing companies are 3-4 companies what you have. So if you use that for benchmarking purposes, add a 10% discount back, you're looking at least 100 rupees plus getting unlocked. And typically when a sector is in a bull run, the subsidiaries, they tend to re-rate the parent also. That's what we've seen historically. So largely because of this news, this is one company where you could actually see some tailwinds and perhaps a lot of interest, not from the institutional investor per se, but more from the HNI crowd.
Because as you said, that entire space has been a darling of market at this point of time, and anything related to electronics manufacturing has been doing well. This, of course, manufactures complex electronics as well. But Nikunj, what about Shriram Finance? We have seen that just this week itself, early TPG had sold around 2.6% stake, and now we understand that Paramil Enterprises is also exiting. Does this tell you that there is some problem and people are booking profits, or does it tell you that the overhang of supply is over?
So you have to realize that who are the investors here? TPG, they've had a long-term association with Shriram Transport Finance that ran into years. Shriram, the Paramil group bought a strategic stake. It was more than an investment, and later on when they were not able to scale up what their plan and what their vision was because of regulatory challenges and change in business strategy, they treated this as an investment. They are looking at exiting their investment. This has been an overhang. This deal of Paramil exiting Shriram Transport has been an overhang even pre-COVID.
Yeah.
Pre-COVID, this has been an overhang. Finally, that deal is going through. Now, there are two parties here. One, Paramil Enterprise, they will get the cash, and second is Shriram Finance. So, why are we picking up Shriram Finance? Yeah. That's largely because of the business cycle the company is in. The business cycle is essentially CV financing. That cycle has picked up, and especially the second-hand CV financing, that business is picking up. See, imagine the number of roads. Number of roads are getting added up. The entire length and the breadth now is getting connected very easily. Interest rates are very affordable. Things in terms of the freight movement, they are also picking up. Interest rates have peaked out, and this company has a great quality in terms of the book quality. So the overhang, I think, for Shriram Finance gets over, and we've seen post the TPG yield, the stock went up.
Yeah.
You may argue and say that in the near term, the institutional interest may not come because they're getting their fill right now because of the TPG block deal and the Paramil block deal. But somewhere HNI crowds have been, HNI cluster and a lot of smart retail guys have been waiting for this news. And I think this really could be a trigger point, at least in the near term.
Okay, let's take some of those index calls, considering yesterday was not quite a consensus, and after yesterday's pullback or recovery, let's see which way the tide is heading today. And this morning, it's pretty much a consensus there. Kunal is calling a buy on the Nifty, and it's a hold for both Kush as well as Nuresh on the Nifty. Similar is the picture for the Nifty Bank as well. A buy coming in from Kunal. Kush is recommending a hold, and a hold coming in from Nuresh as well. So it's pretty much a consensus on the Moodometer as well for both the Nifty as well as the Nifty Bank. Okay, just getting set then for the market open. Let's just revisit what the pre-open rates are settling in at. Still pretty quiet, but Kunal, you think we could do that last lap of magic, maybe like today, maybe start off quiet and then see a recovery to the day's high?
You know, Aisha, the market has been following a very consistent pattern over the last so many days. The first half an hour, first 1 hour, there is a gap up. There is a feeling of exuberation in the markets. In the midst 2-3 hours of the markets, like the middle overs, where you see a lot of consolidation, large cap names taking a bit of a back seat. There is into these large cap stocks, mid caps taking action back again. And the last half an hour, last 1 hour is where most of these beaten down large cap names throughout the day, they make a comeback. Classic case yesterday was seen in Reliance Industries. The stock, I think, fell some 20-30 rupees, from its opening levels, consolidated for a good 2-3 hours, and then in the last half an hour, last 1 hour, the stock made a comeback and recovered almost the entire losses of the day yesterday. So we've seen that pattern happening for the index as well as for the stocks overall in the last so many days, and I believe that's an indication that possibly in the second half of the day we could make a strong comeback and hopefully gain much more than what we've seen, what we are likely to see in the open on the Nifty.
Okay, Nuresh, sell the Nifty or buy the Nifty? What is the trade for the day?
Definitely not a sell on the Nifty. It's a buy on dips going forward, or buy on a breakout move above 18,900. So want to be buying on dips or above 18,900 once it sustains.
If HDFC Bank comes back, do you think Bank Nifty could start outperforming the Nifty again? Because right now, Nuresh, is getting jammed because of SBI, HDFC Bank, and to some extent ICICI Bank also.
So HDFC Bank and ICICI Bank are 50% of the Bank Nifty, and both have been consolidating, or rather HDFC has been drifting, ICICI has been consolidating around the 920 to 960 mark. Either of them makes a move, we could actually see a major outperformance from Bank Nifty. And same is the case, it's not just these two names, even a Kotak Mahindra Bank has slipped off, or SBI has slipped off. It's only Axis and IndusInd Bank which have been relatively stronger. So even one of them takes a move, we could get a new all-time high on the Bank Nifty also in a jiffy. So overall, watching for that, say, price action to confirm, say a price trigger on 1620, 1630 on HDFC Bank, a 940 price trigger on ICICI Bank is what I'm watching out for.
All right, a minute to go. And frankly, if you look at the construct of the market, it's very simple, guys. We can look at last 2 days and we can talk about, okay, FIs are selling again. No. There are a lot of multiple block deals which have happened. So I would insist and I would request our viewers not to look at those block deals as an indicator of what the real activity of the market is. But even if you assume that FIs have sold, because that's the figure, and because of these block deals, the real impact on the Nifty has not been very large. Yesterday we recovered from the day's low. Look at the market breadth, it was okay. The number of stocks which are making a new high, that is a consistent uptick. While we can talk about a huge, while there is a huge, factor which needs to be baked in terms of margin of safety, I guess somewhere we must recognize that we are going through an extraordinary patch of strong momentum. And for momentum to reverse, not like for next 2 or 3 days, but for momentum to reverse decisively, something has to change. Either supply has to come up, which it has started, or macros have to get challenged. And thankfully, the supply is getting absorbed and macros are looking okay. So till the time the IPO and the QIP market does not open up, I will not be too worried about the entire dynamics in terms of demand and supply. First rates, any second now. And the first rates, you want to start actually with banks because they hold the key, frankly. We are what, 40 points away, about 50 points away from an all-time high on the Nifty. I really hope it happens because every day we have been ordering the cake, the bells and the whistles. You want to celebrate. 11245 is the market breadth, phenomenal market breadth. Breadth, I think, has really been the beauty point for this market. That doesn't matter what Nifty is doing, doesn't matter what flows are, there is a vast majority of left out naysayers which are now coming in. They're ready to just jump in right from the word go. 21 points up for the Nifty, the banks are looking okay. IT holds the key because IT yesterday in a sense led the market rally. So will IT be the real, shot in the arm for the bulls to take markets higher? And I think IT index is off to a good start. Not too many newsmakers, Aisha, but in general, I guess there is a lot of green on the screen, and I would again say touch wood.
Yeah, you've got HDFC Life, of course. The CCI has now allowed HDFC Life to acquire, or rather HDFC to acquire their additional stake in the company and HDFC Ergo. So that's a stock in focus. Shriram Finance, let's bring up that stock for you. Close that block deal. Paramil Enterprises as well, post the Shriram Finance stake sale. So look out for that stock as well. Pidilite, which is looking to set up a unit in Gujarat. Look out for that. GR Infra, which is backed projects worth a sizable 1,843 crore rupees. That's going to be another stock in focus. And RVNL, important clarification saying that no breakdown of joint venture with Russia's TMH and that the MOU still stands valid. RVNL has gapped up 2.5% this morning as we speak right now. These are a couple of stocks which are in focus this morning. There's of course Blue Dart as well. After that Motilal Oswal upgrade, the target price up to 8,040. PNB Housing Finance, the management meet takeaways are pretty positive. They've guided for a loan growth of 18% for FY24. Disbursements in the range of 22 to 25%. And then data patterns as well as landmark cars, considering the lock-in period for both these ends today. So just want to revisit those names as well. For the Nifty, it's quiet as quiet can be. Haven't seen any move, but I want to see what Tata Motors is up to. Even in this quiet market, it's at a 7-year high and has been scaling up on a daily basis. 583 on Tata Motors. That's also had a bit of a sedate start, much like the rest of the market. But I can see some green print on an HDFC Bank, for instance, right now. So let's revisit what an SBI, what Reliance, what even Bajaj Finance is up to for that matter. A big move on Friday, and then yesterday it somewhat, hunkered down. Reliance has had a soft start, Bajaj Finance as well, pretty quiet. Kunal, what's going to lead us forward?
Well, I think it should be large caps back again, which could make a comeback. So we've seen good opening coming for many individual large cap stocks. So I think that's a relief for the index. And we're back again about the 18,800 mark on the Nifty. More importantly, I think the Bank Nifty this time is not showing extreme negativity. So at least at the start. So hopefully, if we can add some more green color to the Bank Nifty, we can see a very good recovery for the index and hopefully a second half breakout of the new high for the day for the Nifty. Now, the stock which I will look to trade in the open would be from the mid-cap end, it's Power Finance. That's a stock which has been looking extremely attractive. PFC, RSC both have been looking quite charged up into this series, and I think at 204 levels, PFC is something which I would recommend as a buy, as well as look out for a buy, targets of 225.
Okay, PFC is the opening trade. Just wanted to flag out a couple more names before we move forward. Aptus Value Housing has seen a downtick of around 7%. There's a large trade wherein 1.6% equity has changed hands, so that stock is open with a cut of 8%. Subros, that stock was logged in upper circuit yesterday, 20% higher. It's today as well, gaining as much as 20%. So 2 consecutive days of circuit on that one. And if you look at the 5-day move, that stock is already up 50 to 60% in the week gone by. And lastly, Z Entertainment, that stock had taken a massive knock yesterday, 6% lower, but seeing quite a bit of bounce back today. It's 4 to 5% higher as we speak. That stock, in fact, recouped all the losses of yesterday, trading with 6% gain. Naresh, what is your first trade?
So that would be a buy on HCL Tech. The stock has given a breakout and taking leadership in the large cap IT space. Expecting this to slowly continue towards the 1250-1300 mark.